dissecting this beautiful trade and exactly how you could have taken it if you would have known how to use these concepts yourself. Do go ahead and hit that like button, subscribe to the channel, and comment down below what video it is you would like to see next. With all of that being said, guys, let's go ahead and get straight into the actual content. So how was I able to generate, or at least how was a trade available that was 112 risk to reward, which is pretty insane by any standards. No matter how long the trade takes to play out, 112 risk to reward is incredibly amazing. So there are a few different layers, of course, to this, and I want to essentially break them all down to you. Again, this is the Dow Jones. Now, what is the first thing that we take a look at? It's order flow. It's always order flow. And how do we define order flow? We define order flow from the external swing points of market structure. So at this current time right here, when price was making higher highs, higher lows, higher highs, the order flow was bullish. And then we had a shift to the downside. So this low right here being lower than the previous low. Very simple structure stuff. This is a break of structure to the downside, and this is an order flow shift. At this point, we know that the order flow has shifted bearish, so it's likely that the Dow Jones is coming for a huge pullback. This aligned with the level of supply that caused this, the only unmitigated level, that is, being this level of supply right here, which you can see perfectly gets met and then takes out the low. If I was a swing trader only and I was looking at this position, you would have been able to take a short from the level of supply inside of the level that broke structure to the downside and just targeting the low right down here. And that would have been a 1 to 10 risk to reward. Then nonetheless, price comes back up to put in a new lower high, lower low. Then price comes and puts in a new lower high, which again, as you guys can see, is the buy to sell, the origin zone that gets mitigated by this wick right here, taking a sweep of liquidity to the upside. That is a sweep of liquidity to the upside, and then the sell-off, which you can then see that the swing low from there is this one. So we have this high and this low. That is essentially what we was ranging at when it is that this trade was available. If we just pull back price to here. So at this point, imagine this is how you're seeing price action right now. Swing high to a swing low. And then you will notice that you will need to pull the fib tool from high to low in order to establish your premium and discount. So anything above this is good, anything below this is not good. First thing that I see always is levels of liquidity. So I knew that this right here was buy side liquidity, so not to get involved anywhere near this level. I also then went on to see that this right here is buy side liquidity, so I didn't go anywhere near this level. However, if you actually mark out the buys right here to sells, this is what we call a supply range. It's a range of price where there was an accumulation to distribution. In here is a distribution schematic in order to take place to the downside. Now, inside of this distribution range holds levels of supply orders. So our job in this instance is when price gets into the supply range is look for a confirmation. Because we already know the order flow, we already know very simply that we are in bearish order flow. So we are expecting price to come up anywhere into this region and then go and put in a new lower low, because that is order flow. And that is the simplicity of what we actually teach here at Prosperity Academy. It's not difficult. It's order flow is bearish. So we wait for price to come back up into the premium supply range that caused the momentum to the downside, so that the banks can re-mitigate their positions and continue to take price to the downside. So that gets inside of here. We now need to just drop to the lower time frame, drop to the 4 hour so you guys can see this broader. Again, no different here, just zooming out to the 4 hour time frame. If you just literally look, you will see the swing points. Every point from where price reverses is what we call your swing points, right? And then you can see in here, this is a distribution schematic. Price ranges, liquidates the highs, and sells off to the lows. That is literally a manipulation theorem. So anywhere from where they buy, from where they start to sell, is where you can expect price to reverse. So anywhere inside of this range can expect a price reversal. So if we know that, then we need just confirmation. And for us here at Prosperity Academy, confirmation looks like this. Let's say your order flow is bearish. Awesome. Let's say your order flow is bearish. Okay, amazing. You have a level of supply right here. And then because the market is fractal, we also know that we have not just one type of structure, but multiple structures. So this is what it will look like on the lower time frame, which I will show you in a moment. Shift, tap in, change of character, and that's where we would be looking for our entry. So let me just actually break down what it is that I'm showing you right here. So the order flow is literally the external swing points, as we already know. And then price pulls back into our level of supply, exactly the same as what we're seeing right in here. And then the red lines represent the lower time frame supply and demand structure. So we have high, low, high, low, high, high, low, 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 shift. So all of these points represent the internal structure, break of structure, lower, low. And this break of structure right here, when the order flow is bearish, price pulls back, and then we have a shift internally on the lower time frame. That is our confirmation that the swing low is going to be taken. So what do we have when we tap into this supply level? When we have this shift right here, that we know to be changes of character, we know then that that is our confirmation that price will go now very likely and take this low down here because it's bearish order flow. So our job is to wait for price to get back into this zone and then wait for this schematic. So that's literally all there is. And if I just go ahead and show you right now, this line representation in the actual live charts themselves, you'll understand that there's no difference. So again, the order flow is bearish. You can see the external swing points. We're ranging from this swing high to this swing low right now. Now we've come back inside of here. This is the range. This is the manipulation range. So now we drop down to the 15-minute time frame and we're looking for the confirmation. Now, what does the confirmation look like? The confirmation is a change of character, which is here. Essentially, what it is the buy to sell, the buy to sell. So every time there's, a buy to sell, it's pretty much the same as the external structure. Every kind of reversal point in this leg represents supply and demand, of course. So when we see supply demand come into the market and then we see supply outweigh the demand, meaning that there are more sell orders than there are buy orders, that is our confirmation that price has changed character to the downside. Now, for the purpose of this, you would originally be looking to take your entry here, right at the origin level of supply and taking price to the downside. Now, when you just play out price, so what we notice right there is a sweep of liquidity. So this is where you would be expecting now price is going to tag me in, because price has swept the liquidity. Now you'd be expecting a tag in, but you don't get the tag in. Instead, you get a break of structure, because now this low has been broken. So because this low has been broken, break of structure down, and there is no longer any more liquidity up here, then I would be taking this entry off because the liquidity has already been taken. Now we have a new level of supply, which is this one. And we have all of the built-up mitigation for liquidity, buy-side liquidity. And so that is where you would be taking your entry. Very, very not difficult to understand. Where would you be targeting first? You would want to make your first target these lows right here. Because, again, as within, so without. If we know that the order flow on the external is bearish, and now we look and the order flow on the internal is bearish because it shifted, then we know that price will come put in a lower high, lower low. So what we can do is we can look to take some partial profits at this level of 8 risk to reward. This is what we do with all of our trades, and that is why we have the psychology to watch price play out to 1 to 100, 1 to 50, 1 to 30, 1 to 20 even, is because we've already taken profits off the table when we are looking at, 1 to 8 risk reward. We're already break even because we've moved our stop losses to break even, and we've already managed to secure profits out of the market when price taps into these lower take profits, like this one here, which is 1 to 8.06 risk reward. You can see price makes equal lows, and then price essentially sweeps the lows. But just to confirm it, you have the additional confirmation. So that has taken the low, but just to confirm it, price will essentially go on to continue to the downside anyway. And there you have it. 1 to 8, move your stop loss to break even, take off 50% of the position, leave 50% running. Where to? Literally leave the position running to the swing low, because we are expecting the order flow to take out the swing low right down here, right? So high, lower low, lower high, lower low. That is essentially what you would be expecting. Okay, granted, we've already taken 8 risk to reward off right now. So price could come and then go and do this. And then eventually would get back in here and we do the same thing again. So just because you would take one stop loss using this, you can go and take the same entry model again from the maybe refined level of supply. So the point is just continuously executing until ultimately and eventually you get into the position at the right time and price takes you here. And that is actually it. If you just actually go back over the trade, it's very easy to understand that it's just order flow combined with the intricacies of supply and demand. And it's understanding liquidity. And just master those 3 things. Master supply and demand, master liquidity, and master structure. And you have a foundation that cannot be reckoned with. And that is how we have produced so many consistently profitable traders